All right, everyone. I hope you're doing well. This is the recorded lecture for Chapter 21 for the internal auditing topic. Talk about that, talk about operational auditing a little bit, and touch a little bit on compliance, but not very much on compliance. So here's our learning objectives for the chapter. We're going to spend most of our time thinking about internal auditors, and then the next chunk of time about operational audits. And we might again touch a little bit about compliance audits, but this was initially meant to be a three-part topic on internal auditors, but with all of our changes we've had to adjust. So if we look at the first learning objective, let's just understand what internal auditors do, right? And so the way I'm going to set that up is using the internal control framework from COSO, which we talked about way back in the first or second section of material. And I call this the COSO cube. And so remember we had our 5 components: control environment, risk assessment, control activities, information and communication, and monitoring. Right? And so what we had largely been doing is across the reporting. Ooh, that's bad. Let's fix that. Is across the reporting objective, right? That's largely what we are spending our time doing, auditing financial statements, right? So we'll put a FS for that, financial statement audit. That's terrible, but hopefully you can see it. So the financial statement audit was focused on that reporting piece, right? Now we're going to have internal audit. Internal audit can actually also be focused on the reporting. A lot of it may be internal reporting, but they can have a role to play there. They can also have a role to play. They're the only one, well, the main ones that have a role to play with the operations objective, and they can also have a role to play with compliance. And so, even though initially we've largely been focused on this reporting this objective related to reporting for most of the class, internal audit really can have a piece in all 3. Okay, so there is a professional body, just like we have the AICPA for external auditors. The IIA, the Institute of Internal Auditors, is the professional body that's relevant here. And they have a definition of the purpose of internal auditing. Ultimately, it's an independent, objective, assurance, and consulting activity, right? And they're trying to provide value to the firm. And so they're going to be evaluating ultimately how the company is run, but again, across those 3 objectives of operations, reporting, and compliance. Their mission is to enhance, protect organizational value, and the key here, right? All audit is using risk-based techniques to try and manage the risk to the firm. So we always talked about the risks for financial reporting, right? Fraud, errors. Internal auditors also are focused on mitigating risks, but again, they just have a larger set of objectives. Internal audit is part of the internal control framework. So actually, if we go backwards for 1 second, if I can go do that, right? So technically, internal audit sits down here. I'm just going to write an IA there since my handwriting's not very good with this. Right? That's where internal audit sits, is in the monitoring activity. They're the ones that provide feedback, right, to the managers and to the executives and to the board around how the firm is conducting its internal control responsibility. So even though it provides information about internal control, it also is essentially an internal control function. So some of the major developments impacting the internal auditors. Obviously, the demand from capital markets for managing risks to the firm and managing risks to the shareholders has gone up, right? We've had a set of scandals over the last 20 years, and really since, firms have been around, but obviously the early 2000s had a lot of changes. And so as a result of that, we had regulations, but we also had a greater demand for a stronger internal audit function. And as firms have gotten larger and larger, right, expanded either in breadth or in scope, breadth or depth, either the scale of the operations have gotten larger as far as providing more and more of the same products, or providing products, more and more products, right? There's different ways that firms can expand. And so as firms have gotten larger, then the demand for more control goes up, right? The size of the firm means it's harder for the executives to manage the firm well without errors and potential fraud. And obviously the regulators are demanding more from firms as well, Sarbanes-Oxley and Dodd-Frank and some of these other regulatory demands. There is just like the CPA, there's a certified internal auditor, the CIA, that's awarded by the profession. Similar requirements, although maybe a little bit less onerous than CPA, just a bachelor's degree. And at least last time I checked, it was about 6.5 hour exam, a little bit less than the CPA exam. Obviously, actually a good bit less. And then, but also having a work experience requirement. All right, so moving on to learning objective 2, describing the role with respect to Sarbanes-Oxley. Well, obviously Sarbanes-Oxley is a significant compliance task now with the 404 and 302 sections around internal controls and around certification. And so what do the internal auditors do? Well, they document and they test those controls, because remember, managers are making the assertions, and so they're helping to make sure that managers can make those assertions well. Still, it's management's responsibility to make sure compliance is occurring, and internal auditors are one function or one way that they can do that. But obviously that role doesn't need to make sure that they're still objective, even though they're helping managers. They ultimately don't report to them, right? And the other piece is that external auditors, in some cases, can rely on the work of internal auditors for the financial statement audit, but those are specific conditions have to be met in terms of objectivity or independence and and competence. So independence and competence are the two things that the external auditors would look at to see, can they rely on internal auditors' work. All right, so thinking about operational audits for a little bit, let's learn objective 4. And again, operational audits basically could still consider all of these components, but just as it relates to the operations of the firm. And again, it can relate to all these different levels of the firm. So for example, if they wanted to look at a division that does manufacturing, right? Well, how efficient is the manufacturing process, right? How efficient are they in terms of being able to produce at the lowest cost possible, given the quality they want? Are the steps being followed in terms of trying to reduce waste, right? Those are the kind of things that an operational audit could look at, but they're focused again on that slice of the cube. And again, these will be done mainly by internal auditors, although you could conceivably have an external party come in. For example, the ISO 9000 is essentially, those audits are essentially operational audits, but largely it's going to be internal auditors doing these audits. And so looking at like an operating unit, you can evaluate essentially how well the firm's objectives are being met in that operating unit. There's different divisions they might look at. So for example, with UNCC, the internal auditors for the university, they do operational audits, and they would separate these out into different portions of the university, right? And so you're not going to do all of these generally in a given year. You might have a rotation where you might do, 3 of these every year, right? And it goes in a rotating every 2 years or 3 years is when you expect to do a second operational audit or another operational audit. And so because of the limited manpower, you're not going to be doing this every year. So this is the kind of the layout of an operational audit in terms of the steps, the definition and purpose. That's essentially the scope of the audit. What are we trying to evaluate? There's a familiarization stage. We're trying to obtain knowledge of the firm. You might look at the objectives, assuming you have the operating unit. You might look at the objectives of the unit, how it's set, how it's structured in terms of the hierarchy, and then how does it operate, who are its major suppliers or customers. Preliminary survey, that's kind of the initial set of field work. You have a set of preliminary conclusions where you identify some areas of the operating unit. So then you're going to look at the audit program, what kind of tests you're going to plan, who you're going to use, when you're going to do the work. When you do the work, in terms of executing, collecting the evidence, and then the next step is reporting on the findings. And one key point here I want to make is when you do these reports, this draft report ends up going to the individuals in the operating unit that are in charge, right? Because you don't want to, as an internal auditor, have some surprise finding that gets communicated to a superior level, and then all of a sudden now you've created some bad blood with the operating unit, right? And so you would send that draft report to those individuals, have them look at it and make sure that they at least understand where you're getting the information from, understand your conclusions. And if you've missed something, that's an opportunity for them to let you know that, hey, what about this, right? And so you can include that in the formal report. And then the follow-up is really kind of the next period. You come back and look to see what's the status of any deficiencies that you found. Have they made changes? And you might do a brief re-examination of the area to see if what they put in place is actually functioning, right, in order to address the deficiency. Okay, and just the last point I want to make here about the operational audit is this is really similar to the 6 steps that we have identified for financial reporting audit, right? Kind of this planning the audit up front. You have to make sure you understand what the objectives are, what the purpose is, what the scope is. Familiarization is kind of obtaining understanding. Preliminary assessment, or preliminary survey rather, is doing that. Risk assessment, where you're assessing the risk of material misstatement. Program development is the designing further audit procedures. The field work is actually performing those audit procedures, completing the audit, and reporting the findings is essentially the step where we're forming the opinion and issuing the report. So there's a lot of similarities here, right? So if you understand the general auditing processes, then you're gonna be able to apply it to a lot of different areas. Internal auditors just have different names, but a lot of it is the same meat, right? Because auditing ultimately is the same in its generalities, but differs in its specifics based on the context. All right, so that'll do it for this operational piece. I'll come back with another video for the rest of it.